Hello and welcome to this video from IR Magazine. We're trying something different today. We're bringing you a new type of video where we're going to look at what's happening this earnings season with the help of a series of charts. We don't have a name for this video series yet, but it could be something like the IR Magazine chart show, something like that. So let us know what you think. And to do all this, we are joined by Nick Mazing, Director of Research for Sentieo, who has very kindly put these charts together for us. So Nick, thank you so much for doing that. And thank you for joining. How are you doing today?
I'm doing very well. Thank you for having me.
Fantastic. Great to speak to you today. Okay, so let's get into it. What are some of the sort of big picture trends that we've been seeing over the last month or so?
Yes, I mean, everybody knows the markets are down and they're also very volatile. We've seen most of the broad indices down in the double digits, whether it's the S&P, the NASDAQ, or any of the emerging markets and so on. But we're also seeing increased volatility, where what this means is that the daily moves of 2 to 3% are very common, which means that you have individual stock moves of 6-8% on absolutely no news. If you look at the next slide, really the big news are inflation and rates. It is a very macro-driven market. Inflation has been a problem. We just had the first 50 basis points hike since 2000 yesterday, so it's been 22 years since that has happened. Inflation has been a multi-decade high, and policymakers globally are trying to address that. In terms of broadly, in terms of financial conditions, you're seeing increases in rates, whether it's government bonds, mortgages, corporate bonds, and so on. This hurts duration companies where the cash flows are a few years out. And then on the next slide, one of my favorite indicators is how many S filings are there with the SEC, which is IPO filings. And that market has been put completely on ice. As you can see, we had a pretty decent boom with the SPACs in the last 2 years. The SEC really came down hard on that. That's over.
Fantastic. Thank you, Nick. Yeah, a huge drop in the number of listings there. And yeah, really interesting slide as well. And that point about, large amount of volatility for companies, whether, they have any news out or not, up to say 8%, something like that. So, certainly something that IR teams will be needing to explain to their management at different points. So next up, we're going to look at how these trends are playing out on a sector basis. So Nick, what have you got for us here?
When the markets are down in the double digits, you're going to have certain sectors that are completely out of favor. And in this year, the sectors that have been hit really hard are cloud software. Many of them are not generating cash flows. And if you look at, let's say, the one of the more popular cloud ETFs, it's down around 25% year to date. Biotechs, even though they're not in the news, it's even worse. The popular ETF there is down 35% year to date, and the drawdown from the peak in early 2021 is worse than the 2008 crisis. It is so bad in biotech land that I ran a screen last week, which looked at negative enterprise value biotechs, and there was 167 versus 8 a year ago. These are basically companies that are left for dead. So obviously, very difficult conditions in those two sectors. On the next slide, when we look at kind of the winners, energy, obviously doing extremely well. Everybody knows what's going on with oil prices, gas prices, especially gas prices in Europe. We have a major energy crisis, which is contributing to really increased profitability of the energy companies. Also, other sectors that are doing well are defense. Many major countries are permanently increasing, or at least for the next few years, are increasing their defense spending as a percent of GDP up to their commitments or higher based on NATO membership and so on. Agriculture is doing extremely well as well. Fertilizer prices across the board are through the roof, and the entire chain there, 2022 is expected to be really record profitability for a number of those companies. At the next, if you look at the next slide, this is not necessarily sector specific, but a framework that has been that I find useful is if the market perceives that your company has been a COVID winner in one way or another, it is being punished right now. What this means is in whether it was like a direct COVID winner, like Zoom, everybody immediately went on Zoom, right, during COVID 2 years ago. But also if there is some kind of a perception there was a demand pull forward, whether it's telemedicine, whether it's e-commerce, and so on. So what I have here is 2 years worth of gains are completely wiped out for, Zoom peaked first, but then we had Peloton, Teladoc, Shopify, Etsy, Netflix, and so on. And a lot of these companies are reporting last week and this week, and you're seeing really big drops there. Just the market doesn't like COVID winners right now.
Yeah, thank you so much, Nick. No, really interesting charts there. I think the bear market in biotech stocks really kind of gone under the radar, but as you say, it's been going on for several months now. And then yeah, on the tech side, I think I read recently that sort of all of the FANG stocks have now given up their outperformance relative to the S&P 500, which they'd been building up over the last 4 years. So really, like, you mentioned the COVID winners there, but the whole tech sector really sort of coming down to earth this year. And then for the last part of this conversation, we're going to look at sort of earnings call transcripts. So where we look at what topics are trending, what people are talking about, and also what words people are choosing to use in their conference calls, which is always really interesting. So Nick, over to you.
Yeah, so on the first chart, and the transcript trends these are monthly counts of transcripts in our database that mention a certain word. So obviously Ukraine is a standout topic. You had a minor bump back in 2014, 2015 around the Crimea invasion and the first round of sanctions and so on. Now, obviously, it's a huge topic across many aspects. So you have asset write-downs, BP, I'm old enough to remember, they were British Petroleum. They took a $25 billion, $24 billion write-down on their energy investments. In the energy sector, you're seeing, I think, the largest numbers. But you're seeing disclosures around supply chain impacts, whether it's neon in semiconductors, industrial diamonds, titanium, wire harnessing, and sunflower oil, wheat, and so on. The next topic, inflation. Obviously, inflation was accelerating even before the war. So that's, there is a lot of, it dominates the political headlines, but it was already an issue before the invasion started. Headline inflation, which in the developed markets is under 10%, is not your company's inflation, simply because your company's basket may be up quite a bit more, especially if you're buying commodities or, energy commodities or food commodities and so on. It is easily in the double digits, depending on the specific purchasing basket for individual companies. In addition to this, since there's a lot of headlines on every monthly reading, keep in mind that inflation rates are not necessarily comparable across countries. So, for example, in the United States, food and energy is around 15%, which is really where the biggest hit has been. In emerging economies, food and energy, like let's say India, it's over 50%. So keep that in mind as you're getting the headlines. But here is something interesting. Even if your company is affected negatively by inflation, when you look at this next slide, is one of my favorite slides. I'm looking at Procter & Gamble and Nestle. Their gross margins are at multi-year lows, and yet their stocks are near all-time highs, right? So some of that is just factors, right? There's money going to staples, and these are mega caps, so they're kind of safe stocks and so on. But what is happening is the market is seeing through the hit. So in other words, the market knows that these companies will recoup pricing. Now, this is obviously not financial advice, but I can give you consumer advice. Stock up on Nespresso pods and Charmin toilet paper, because I can guarantee you that the prices you're going to see in the stores are going up. So that's almost a guaranteed return right there. On the next slide, if you look, another topic, supply chain. 2 years later, supply chains are still a problem. Now we have complications from Ukraine. Let's say the whole Black Sea. I was reading an insurance publication. Actually, you cannot insure ships to go into the Black Sea because of the mines that are floating around the sea. So even if the war ends tomorrow, you're still going to have supply chain problems. A new kick to that is the very strict policies in China around COVID lockdowns. Everybody has seen the satellite pictures with the ships all along the coast and so on. So supply chains are still a problem. On the next slide, labor. So labor markets are extremely tight. Just like the Fed hiking rates, low unemployment is a late cycle indicator. And we're seeing this, obviously, language around the great resignation, employee turnover, so it looks very similar. So labor markets are very tight, and we're seeing this being discussed in Q1 calls. And then on the last slide, I think it's one thing that came up is are company using conflict or war on invasion. In general, conflict and war are more common than invasion. You can see warring started increasing back during the Trump trade wars, but war and conflict are the more common terms on transcripts.
Great, thank you, Nick. Yeah, those kind of questions around which words to use. I mean, all information publishers, those are things that people have have had to deal with and had to think about ever since the start of this conflict. So really interesting to see how that's coming out in the conference calls. And I think the sort of broader takeaway from those as well is just, people are talking a lot about inflation and interest rates right now, but those things aren't going away, and we're going to be still talking about those for the rest of the year as well. But that kind of brings us to the end of our conversation for today. Nick, thank you so much for joining and sharing your charts and data with us. We really appreciate it.
Thank you for having me.
So we're looking to do more videos like this. So do get in touch and let us know what you liked, anything we could improve, and we can take all that into account for the next one. But from us, thank you so much for watching, and bye for now.